The question, who is an investor, I would like to address it from the point of, or trying to describe first what an investment is, or describing the whole act of investing. And for me, the act of investing speaks to either an individual, a government, a corporate body committing resources in an endeavor or anything at all in a bid to get a positive return at the end of the day. So for an individual, you are committing, for instance, money into a business, either as a loan or you're buying a share of that business. And at the end of the day, of course, you're not doing charity. You're expecting to get something in return at the end of the day. For governments, government is looking at making money, but sometimes when government do investments in infrastructure, for instance, it might be in a bid to create job.
Okay, good.
But at the end of the day, of course, there will be taxes that they will see, and at the end of the day, make money from. So that's what the whole idea of investing is: committing resources, hoping to get something positive at the end of the day, and that's an investment. So an investor, of course, the answer is, I've answered that. An investor is anybody at all who has engaged in something like this. Someone who has committed resources, time, energy, money, and at the end of the day, expecting to get something positive. The characteristics of a good investor. First of all, an investor should be skilled in the act of investment or investing. And like we said earlier, the best and the most important investment you make is in yourself as an investor. So first of all, you need to train and skill yourself in the act of investing. Like I said, we are speaking to financial investment. So if that is the case, it means that you need to study more. You need to engage in maybe mentorship program that will put you in the right either frame of mind or in the right path to investment. So you need to train yourself first. That's first of all what it means to be a good investor. Secondly, investors are not people who invest out of emotions. So while investing, a good investor considers the facts. What are the facts? I might not like you, but if I can make money from your business, I can key into it. But for someone who plays on emotion, the fact that I don't like you, I'll just give away. And meanwhile, there are chances that I can make something from you. So a good investor should look out for the facts. What are the facts? Can this business bring money? Can this financial instrument make me a good return? Can this financial security make me a good return? It's not about if I like the government. It's not about if I like the individual I'm investing in. Go for the facts. Another thing a good investor should consider is understanding. I think it was Warren Buffett who once said that you need to understand what you're going into. So he while talking to some group of graduates some years back, Warren Buffett said he will not beat himself up about not investing in Microsoft when Microsoft was coming up. The reason is that it's not his terrain. He doesn't really understand the business. So, that goes to tell that what you should be looking at as a good investor is that business that you understand. So that at the end of the day, of course, you will not even be shortchanging yourself. In the world of finance and investments, the truth is investments have been characterized or divided into different types. Like if you meet a financial expert A, he would give you another category or another type or grading of investments. But I'm not saying I'm trying to give you the best of it, but I'll give you from my own understanding how investments are graded or the types of investments. So to start with, I'll start from the public to the private investments, the less risky to the high risky one. So for me, the most public and the most risk-free investments is what we call the government investment or government-backed investments, such as the bonds, government bonds. So the federal government can raise a bond tomorrow, today, say they want to finance infrastructure projects. That investment is risk-free for the fact that it is backed by the federal government. And the arm or the part of the government that sees to that is the central bank. So why it is called risk-free is because the government will always pay. If worst gets to worst, the government will print money. But you don't make so much money from that. It has the lowest return, because you can just put your money there and go to sleep. That is one. Then another level is what we call corporate or municipal bonds or corporate or municipal investments. Now, corporate investment or corporate bonds are bonds that are raised by reputable companies, and they decide to float a bond and say they want to raise money to either expand business or to make more products or whatever. And I'm speaking to products, or I'm speaking to companies like MTN, MTN, can even be Apple, can be Microsoft. Tomorrow they can decide to structure a bond and float it in the market and expect people to buy into it. It's less risky when you compare it to other forms of investment, but then it is more risky than that of the government. More risky because they are not governments. Anything can happen to the company tomorrow and they can fold up, right? That's why I say it's more risky than the risk-free investment, which is that of the government investment. Now, that will lead us to like stocks and stocks and equities, like it is called. And stock just refers to buying a part of a company. It's also a public type of investment, because most companies that you're buying are public listed companies in the stock exchange. The rate of return is better than what you can get from the government's bond. It's better than what you can get from some corporate or municipal bonds. Now, that will now take us to private investments. And then private investments will be speaking to what we call private equities, venture capital. You're looking at hedge funds, you're looking at forex funds, and mutual funds. Now, these funds are private funds that professional fund managers decide to float. They have higher risk of default, but they have higher reward. Honestly, it depends on your age. It depends on your investment.
It depends on age too.
I mean, it depends on your age. It depends on your investment horizon. And by investment horizon, I mean like how long do you want to do an investment? Some people want to put money today and remove it tomorrow. But to be honest, that is more of trading than investments. Investment is a long-term plan or a long-term goal. You're looking at investing and making something in a future date, a more future date than buying and selling off immediately. So you're looking at your age, you're looking at your investment horizon, you're looking at okay, how much do I even want to make in return? You're also looking at the risk. And to look at the risk, you need to look at your own risk appetite. Some people are very risk averse, and that means that, I don't want to take any risk. So to answer your question, if you are that type of person that don't want to take any risk, I advise you to go for government-backed investments. You make very little money, or at least you won't have high BP. Okay. And if you're still young, you still have a lot of time in your hands. You have a lot of maybe a lot of resources also to commit into investments. I might advise you to go into stocks. I might advise you to even buy some corporate bonds, you know. So the long and short of everything is that I don't have the best. The best will depend on the individual. In investments, it's always advised you not to put all your eggs in one basket. And by that it means, even if I say today that cryptocurrency, that's not what I'm saying. I'm just saying by way of an example. If I say today that cryptocurrency is the best form of investment, a wise investor will not put all his eggs in that very basket. So it means that, as to address your question, use of today should look at a very diversified kind of investment. Investment that buys a little of this, a little of that, so that if tomorrow a little of that is going down, you can make up from the other one. You know, so you should look out for a more balanced investment. And to be honest, what seems to be the most balanced type of investment is the mutual funds. Now, the mutual funds are investments that are being managed by professional fund managers, right? And it takes funds from a lot of individuals and then buys a little of this, a little of that. So, for instance, if you are to invest in a money market investment, for instance, a money market investment will buy some bonds. It will buy some what they call certificate of deposits. You can buy some CPs. You can buy real estate. Not real estate. Sorry, I'm speaking to money market now. So you can buy some of these short-term investments. You know, by short-term investment, I mean investments that span for between maybe 1 to 3 years. You can call it a short-term investment, 1 to 3 years, right? So, a money market investment does not invest just in one thing. So, it buys a lot of financial assets, and then the fund manager is now left with the responsibility of always rearranging these assets, depending on which one is doing better at each point in time. So at the end of the day, you're making money for those individuals. So the long and short of everything is, maybe, if you ask me, maybe money markets or just mutual fund is best, which is a very big and broad topic for, maybe you can discuss that another day, but maybe money markets investment, money market mutual funds. So it's happening in our eyes. You can see real estate is really booming. It's a good investment. What I can say about it is a good investment. But you should also consider, while doing investments, the liquidity of that investment. And what I mean by liquidity is how fast can you convert that asset into cash, right? Anyway, that's if you care for liquidity, you know. So you own a land, you own a property. You know, it's not all the time you put your property for sale that you are able to sell it immediately. No. So maybe you should also consider that next time you want to do real estate investment. I'm not saying it's a bad investment. It's a very good investment, but what is your objective as an investor? What do you want to achieve? So you should look at that. Look out for that. If you want to play the long-term goal, okay, maybe you should buy real estate and let it appreciate. So you shouldn't buy a house today just buy a house 10 million naira today and you're expecting to sell it tomorrow for maybe 20 million. You're not being realistic, you know. So if you want to sell it at that price, which is possible, you have to give it time. But then ask yourself, is that what you want as an investor? Do you want to wait that long? So objective, like you said, is very important while investing. So is timing important in investments? Absolutely. I think time is really important because you know, while making investments, financial investment like we're talking about, you need to consider what time to enter the market or what time to exit, so that you don't come in when others are going out, and then the whole thing collapses on you. You know, I'm not talking Ponzi scheme now, but I'm citing, or I'm looking at investing in stocks and equity. For instance, you really need to consider what time you're buying what stock and what time you can sell off that stock. In fact, any other investments, even in bonds, because it's not every time you buy a bond that you hold it to maturity. Government sometimes floats 30 years bond. You are not bound to hold it to maturity. You can sell it off, you know. So, but the point I'm trying to make is you need to know at what time to do those things. And for you to do that, it boils down again to what we are talking about, which is supposed to be the most important form of investment. Invest in yourself so that you are skilled enough to know what time to enter or what time to exit. Absolutely, I think Achar Business Talk-Show is doing a whole lot because this is an internet age. For instance, we are exposed to a whole lot of things, but speaking to human capacity development, I think Achar Business Talk-Show is getting it right by affording viewers this opportunity to listen to us discuss some of these things, because some of us are not exposed to these things, even though we are on the internet. We are busy looking at some other things that might not really be of value to us. So if we are all striving towards financial freedom, financial literacy, I think we should key into what Achar Business Talk-Show is doing. So I absolutely approve of what Achar Business Talk-Show is doing.
All right, thank you very much. And please help me to do one thing. Help me to do shout out to NIAS Events, Suits, for giving us this platform, for partnership and all that.
Right, so I would like to recommend and commend NIAS Events and Suits for this great partnership with Achar Business Talk-Show. It's really important that they saw the need for this kind of dream to be brought to reality, and then they are partnering seriously to make sure this business talk show gets to every nook and cranny of the country. So I'm just saying a big shout out to this events center for hosting, and of course for supporting this business talk show.
Thank you very much. It's a pleasure to have you on the show.
It's a pleasure. Thank you for inviting me.
Okay. Right. That's it.